Welcome everybody to our Leaders in Housing Counseling call. We have a good turnout and we're going to jump right in. We're going to spend the first few minutes on the good work that's being done in Congress about housing counseling funding. We're really, I think, being very strategic in this, and Melody's going to walk us through the latest progress and where we need to go. But big thanks to the many people who participated already, and there's more to come. We're especially in the Senate, so we'll give you all the insight on that, and really appreciate the amount of effort and the quality of what people are doing here. So thanks a great deal. It's all part of the push to get back to $65 million in housing counseling funding. We're going to spend most of the call with our friends at the Center for Responsible Lending, and there'll be an update on the payday lending fight and how the effort is to get this much more appropriately regulated and protect people. And we'll spend the rest of the call on FHA and some of the emerging issues on FHA. And on both issues, if you're a practitioner who's got issues either on your clients have had payday lending issues, or if you're dealing with FHA loans and you've got things that need to be elevated, we would love to get those into the question box so that that could be part of the conversation. So feel free to jump in on that, and we'll have plenty of time for discussion. We're very interested in what you're seeing in the field, and that's tremendously helpful to develop policy and strategy. We're going to do a quick review of the picture. It's worth 1,000 words, which I hope people are appreciating and enjoying, and I am, and thanks to the submissions, and we have room for more if anybody's, I'm sure you have pictures, and it's a question of going into the hard drive and finding them. These are all pictures that tell a story. We'll talk a little bit more about that later in the call, and we'll do a quick plug on NHRC membership. And then next, we'll talk a little bit more about this at the end of the call, but we're going to have national capacity on about housing counseling and working with people from different communities in the Asian and Pacific Islander communities. You know, this is a growing part of our work, and we thought it would be time to do another check-in with national capacity, helping us to become a little bit more competent about dealing with people from these communities. It's continuing to be an area that is both growth and opportunity, and several years ago we had a really terrific conversation with Jane Duong from National Capacity, and we'll have a team of people, the current team of people, talking with us this time around. So please mark that on your calendars as well. So with that note, let's go to our legislative update. Melody, fill us in.
Thank you, Bruce. Hello, everyone. I'll just jump straight into it. So the House and Senate have returned to Congress following, I believe, a 2-week recess. So they're jumping right back into the appropriations timeline. Specifically, the House Appropriations THUD Subcommittee will resume markup of the different bills. We anticipate that's coming sometime in later this month or early June, but we don't have an exact date according to our sources in the THUD Subcommittee because they're still waiting for their subcommittee allocation. As soon as they receive that, we'll definitely let everyone on the call and in our networks know. But in the meantime, we're still continuing our outreach with state and local groups around the country, with their legislators in the key states represented on the House and Senate THUD. We've had a few conversations so far. In particular, we had a conversation last week with Senator Collins' appropriations staff and many groups in May. I think we had about 10 organizations represented on the call. It was a very substantive call. We went over a lot of Maine-specific stats on housing counseling, the different issues that agencies are facing in their state, and why they're really pressed for additional resources. I touched base with Senator Collins' appropriations staff just earlier this week, and she informed me that she did have the conversations with her team. They forwarded the sign-on letter that main groups, the CDCs there, and other action agencies have submitted to their staff. And we hope that we'll be able to touch base later on this week or next week and see any progress that may have happened. But we're very, very excited for this conversation to continue because, as some of you may know, Senator Collins is the chairwoman of the Senate THUD subcommittee in Senate Appropriations. So she is a critical piece of ensuring that housing counseling program at HUD has increased funding. And we're hoping that we'll be able to move the needle on the conversation, as she would be an advocate. In the meantime, we're reaching out to other senators and legislators in the House. We have 2 calls tomorrow, in fact, with Senator Lindsey Graham from South Carolina, who is a member of the Senate THUD, as well as Representative Torres from California in the House. And we're just reaching out to these groups, and we're telling them, please, if you have case studies, if you have data points, any information you may be able to provide us on the call, so we'll be able to convince staff to convince their bosses of why this is so critical. We always push the sign-on letter, the national sign-on letter that we had and published last month, as well as the state-specific letters. So we're hoping that we're making some progress. We'll definitely keep everyone posted on that in terms of appropriations. As I said, we're trying to make some ground before markup when people sort of commit to their programs and their funding levels, so we'll see what happens. That is appropriations. One very positive development is that we reached out to Chairwoman Waters, who is the chair of the Financial Services Committee on Housing Counseling. Her legislative staff and committee staff have informed us that housing counseling is one of their priorities. They sent to us a policy memo outlining how important housing counseling is to the national conversation around housing and infrastructure. And in this policy document, it explicitly states that increased funding is necessary. That discussion is pending. I'm currently working with her scheduler on an exact time, but we're hoping that we can push housing counseling to the national conversation. This is a huge opportunity right now for advocates in this space because of the renewed focus on the importance of housing across the country, across different demographics. Next week, they have a hearing on minority homeownership, and we're hoping that we'll be able to have a legislator or two discuss the importance of housing counseling and ask the panel questions, and we'll keep everyone on the call posted. But ultimately, we're really, really busy, as usual, ensuring that housing counseling stays at the forefront of lawmakers, and we'll continue to update everyone on our progress regarding increasing funding. Now, with that, I'll turn it over to Bruce.
So, if you get an email from Melody, please respond. This is so valuable. And we've got key conversations happening, especially with Republicans in the Senate coming up in the next few days. And if you're in South Carolina and you're on the call, make sure check for or write Melody, whatever you can do, because we're talking to Lindsey Graham staff tomorrow. And Tennessee's coming up, working on that one right now, Lamar Alexander. So a lot of this is really just critical stuff. If you're from West Virginia, we really need you. We're going to be doing calls with those senators as well. Okay, thanks everybody for what they've done. And the main groups were just amazing, really impressive. So
this is Melody. I'll just jump in. If anyone on the call is from the states of Missouri, Tennessee, Indiana, or Texas, please reach out to me. Some of the legislators that we're trying to do outreach towards in the next upcoming days is Senator Young from Indiana, Senator Alexander from Tennessee, Senator Blunt from Missouri, Representative Al Green from Texas, Representative Ann Wagner from Missouri, and also if you're from Washington, Senator Murray from Washington. Thank you.
Thank you. Perfect. And I just add that one of the areas that we're also working on is the disaster recovery and CDBG-DR legislation, and that's where Green and from Texas and Wagner from Missouri come in. And we had a really good conversation with Schatz in Hawaii around getting CDBG DR to be a year-round allocation rather than having to do it disaster by disaster. So there's lots of opportunities. There's key work for housing counseling and key work for our communities. So it's an area that we just have got to be have a leadership role in. So all of which is to say, you know, the fact that they hear from local constituents, and that's you, makes the conversation much different. I mean, everybody likes us as an HRC, but it's just a different conversation if it's with the local groups that that really represent the constituents of the individual senators and House members. Good. Well, thank you for that. So let's dive in. The Center for Responsible Lending has been a critical organization around home ownership, around the especially in communities of color, and during the foreclosure crisis, had a huge role in helping develop the strategies against predatory lending, and then in the foreclosure crisis, helping people keep their houses, identify who is impacted the most, and done a lot of groundbreaking work. And we have Michael Kravitz here, who's to talk about payday loans, but actually Michael, I'm sorry, I said Matthew Kravitz, okay. My mistake. It actually be good if you give a quick explanation of CRL to people and a little bit of the history. I think some people may not be as familiar with it and your long and valuable history.
Sure.
So Matthew.
I'll try. Thank you for the introduction. I'll try my best to give the history. So Center for Responsible Lending, nonprofit, nonpartisan organization. We are focused on protecting home ownership, building family wealth through elimination of abusive lending practices. And we are an affiliate and an outgrowth, actually, of Self-Help Credit Union, which is based in North Carolina. However, it has a presence nationwide. And from our experience in North Carolina, we saw how some of our credit union members at a particular time, I think it's the early 2000s, were taking out payday loans, and it was wrecking their finances. So we were part of a broad bipartisan coalition with faith leaders, veterans groups, to reinstitute a cap on interest rates in the state, alongside, of course, working to create an anti-predatory lending law in mortgages in North Carolina. And we, again, sort of spun off of Self-Help and became our own organization, still affiliated with, I should make clear. And yeah, since then, we work on a range of issues. So our big ask for this call is for nonprofit organizations to sign on to a public comment letter in support of keeping the 2017 Consumer Financial Protection Bureau rule, which would help stop payday and car title loans from trapping people in debt. And Bruce has circulated a link for your group to sign on. Just if I could give a little background on this, for more than 5 years, the Consumer Bureau looked at payday loans. They found that these loans, which have APRs well above 300% typically, lead to long cycles of reborrowing. They're devastating people. For instance, 1 in 5 car title borrowers has their vehicle seized for failure to repay. In 2017, the CFPB issued a rule, with the heart of the rule being a requirement that lenders verify a borrower can afford the loan, considering both their income and expenses, before the loan is issued. That's generally the rule, the standard. So, you know, as you guys well know from experience in the mortgage market, this sort of ability to repay standard is a bedrock principle of responsible lending. And this rule is, which was again issued in 2017, is incredibly important to prevent predatory lenders from taking away wealth from low, moderate income communities and communities of color, which they have been shown to specifically target. And the rule provides a baseline consumer protection nationwide, helps also crack down on online payday lenders that try to skirt the state interest rate caps that are in place for about, I think 16 states plus the District of Columbia have strong interest rate caps. So it's important for the entire country. And earlier this year, the new CFPB director, Kathy Kraninger, proposed gutting the rule by removing the ability to repay standard. And we are currently in a crucial comment period whereby individuals, groups, anyone can, as you guys well know, voice their opinion, and agencies are required to consider comments, which is why we're hoping for as many comments as possible from as broad a range of groups and individuals as possible to be submitted. And the way we can have, one of the ways we can have a really loud voice in this is this national letter, which again, it's been sent around, and I hope your group will sign on. I hope you will also share it with allied organizations or even just groups you might think are allies on this one issue. The deadline for signing the letter is May 10th. And if you have any questions, my email address is matthew.kravitz@responsiblelending.org. And I'd be happy to answer any questions now, if there are any.
Good. So, Melody, have we gotten any questions?
Yes, Bruce, we have a few. One moment. How do we, one member asked, how do we sign on to the national letter?
Sorry, go ahead, Bruce.
Go ahead. Well, I was going to say, we sent out a link in the email that went out this morning on the agenda. If you look, there's an email chain in there, and the next email down has the link in it. But maybe we should just send it out again, Melody. Maybe we can after this call, we can send that out and any other follow-up things we want to do, so it's easy for people to have.
Yep, and the link again is to a Google form where you will see the text of the letter. You'll see a spot for your organization, and it's to put your organization's name exactly as you want in the letter, and just some contact information in case we want to clarify that, not for any other purpose.
Yeah. And I think you ask if there's an if the person writing is authorized to sign for the organization, which we do as well. It's always very helpful. Good. Well, thanks so much, Matthew. Keep up the good work. We will want to do what we can, and certainly if we're hearing more in the field, we'll be happy to pass it on. Sure.
And sorry, if I could add one more thing.
Sure. Yeah.
In the letter it says this, but I want to make sure people are clear. Our primary ask is for, again, your organization to sign on to letter. However, if you are able to also spread the word, again, to other organizations for the letter, but also to do a call to your constituents, people on social media especially, who follow your organization, we're directing them to stoppaydaypredators.org. And that's a portal where people will be connected to regulations.gov and can submit a public comment that way. So that's how we would get individuals to sign on, and rather to voice their opposition to gutting the rule. So thank you.
And there's been a discussion, I know, among advocates about on the CFPB what's more effective with the current CFPB, because we know that there's a kind of a change in the leadership and in the view on regulation, and the question is a sign-on letter as effective as sending individual comments? Should we do both? Is there special value to doing an individual comment? Matthew, what's your thought on that?
There's the most valuable thing is an individual comment, and our organization would be happy to work with your group to help in the drafting of that. So if you could also circulate my email address, I'd be happy to connect you with the appropriate. I'd be happy to connect folks with the appropriate staffer, so that you can help, so that groups can share their unique perspective on this issue, and we can help them in that process. Yeah. So I guess the most powerful thing are individual comments, from groups or individuals. And the reason, I'm just making the national letter the focus is that we're coming very close to the deadline, this being May 10th, but I don't want that to dissuade people, and we're happy to work with them.
Matthew, someone asked a question regarding, do you have a template for individual comments or talking points?
We do have essentially an outline, and we can help groups to flesh that out. And I'd be happy to connect with anyone to do that. We send out just out of an abundance of caution, we send out the outline like on a one-to-one basis, not to email listservs. But again, very happy to work with groups and make it a quick process to get something to weigh in on this.
Thank you.
Good. So we'll get your email address out, and we'll also get the link to the sign-on letter out again after the call. Excellent. Thank you, Matthew. So let's pivot to Melissa Stegman on FHA issues that are emerging issues. And again, if you've got FHA issues either about what Melissa's talking about or others as well, we'd love to hear from you. We realize that FHA lending is a larger part of our work than it used to be, and it's really helpful to hear from people in the field about what you're seeing and problems that are around that are specific to FHA insured loans. So, Melissa, welcome, and take it away.
Great. Thank you so much for inviting me to join your call today. We'll be talking about two issues, and those issues are HUD's recent mortgagee letter on down payment assistance, as well as HUD's recent mortgagee letter announcing an underwriting change. So first I'll go into the down payment assistance issue. So on April 18th, they issued a mortgagee letter which set forth new documentation requirements for down payment assistance provided by government entities in connection with FHA loans. And the wording of this mortgagee letter, I think, is a little bit confusing, but it essentially says that government entities, in other words, generally state housing finance agencies, can only provide down payment assistance to people in their geographic jurisdiction. So this bars providers that operate on a national basis. For instance, a Native American tribe in Utah operates an affordable housing program, the Chenoa Fund, which provides down payment assistance nationwide. And so they have alleged that the new policy puts their down payment assistance program out of business. And they brought a lawsuit against HUD on April 22nd, seeking to vacate the new policy. And then HUD announced it was delaying the guidance by 90 days. It's interesting. I was just looking at their mortgagee letter announcing the delay, and they say it's something about like to clarify documentation requirements, but it seems pretty obvious. So it was in connection with this lawsuit. So anyway, so all of this is on pause for now, but I think this, depending on what happens in the next 90 days, it could really heat up again. And kind of by way of history, as you're likely familiar, FHA had a really bad experience with seller-funded down payment assistance through organizations like Nehemiah, which exploited a loophole in HUD's policy. And HUD has found that default rates on loans with gifts from sellers to be nearly twice the default rate on loans with gifts from family members. And so some argue that HUD is unfairly projecting that experience onto government entities that operate on a nationwide basis. That's at least the argument we're hearing from the groups like the Chenoa Fund, that they say that this is a completely different kind of situation, but HUD is acting like it's like what happened before. And actually, the Housing and Economic Recovery Act contained a provision which ensures that sellers could not provide funding for, they changed to a 3.5% minimum down payment. So there are prohibited sources of funding. And so the Chenoa Fund has argued that their loans outperform the averages of governmental entity-assisted FHA loans. They argue that HUD should begin to gather data on the performance of individual government entities providing down payment assistance. They've suggested something sort of like the Neighborhood Watch system, which HUD currently has for lenders. So, I mean, the Chenoa Fund has been the most visible on this issue because of the lawsuit and such. But I understand there are a few other providers that provide down payment assistance on a national level. But I think Chenoa Fund is one of the biggest. I'm not entirely sure. So I don't know if if you prefer for me to talk about the other issue first and then we take questions, or if we should stop now. But
well, let me jump in. Let me just jump in quickly on sort of just on the down payment issue. So I think there are two sets of issues that HUD has been worried about. So one is the Nehemiah Fund kind of developer provided down payment assistance that was clearly self-interested, inflated the values of buildings, and was clearly just a sales tool. And I got to see it in action, and it was clearly a very profitable marketing company effort. And I completely understand that concern. There was a second one, which is that a number of, so down payment assistance by governmental and tribal organizations is what's allowed in the down payment world with Fannie. A lot of these that they're most concerned about are not the state housing finance agency programs, but they're by these smaller government entities that are kind of a lot more rogue operations in what they're doing. And and part of it, they're doing is charging higher interest rates to pay for it, but in fact the rate can be a lot more, and they're clearly doing it as a money-making operation. And the belief is that these then have the people who work who run that particular entity, in fact, get larger salaries, and it's very small governmental county sort of organizations that are doing things like this, and the pricing on them is more than it needs to be, and it ends up disadvantaging the borrower. And the idea is that if they were just selling it in their community, it wouldn't be that profitable a business. So they want to go outside and sell it everywhere as the good guys, but in fact, they're not such great offers. And as you said, HUD has FHA has an experience of these loans not performing as well. And I don't know what the pricing is on the tribal group you just mentioned, or how that works. But there's a number of companies, or I'm sorry, they're governmental institutions, but are operating as more than just outside of their jurisdiction. So that was a way of trying to rein that business practice in. So that's my understanding of this.
Yes, and
yeah.
oh, sorry, go ahead.
No, it's a
Yeah, I completely agree, and I think they kind of, I agree there are bad actors out there, and I think, and I'm not trying to defend the Chenoa Fund. I'm just because they've been very much out there on this issue. I'm just trying to bring different sides of the perspective. But I think there's a concern that in the attempt to root out the bad actors, it kind of is overbroad. I mean, at least that's what I'm hearing. I don't know exactly like all the details of Genoa's pricing, but they actually in their complaint they talk through a lot of data about their loans and such. But so anyway, I think there's concern that it's taking out the bad actors, but it's also perhaps ensnaring some good actors. So, and there's another dimension with the Genoa Fund because they're associated with a tribe, and HUD is required to consult with tribes, and so there's like all these other issues involved there. And so, and I think another potential issue, this gets in perhaps some of the process and legal issues, is that this was put out there as a mortgagee letter and couched as guidance or informal guidance. And I think there's a sense that this really makes a huge change, and they didn't go through the appropriate rulemaking process. So, I mean, I think all those things are kind of coming into play here and have made this like a very complex situation, because I agree that there are problems, and
yeah, and so
address it, but might not have gone about it the best way.
No, it's all good. And I think what happened at the point where FHA put out this notice, some of the counseling organizations were told by lenders that they are putting their down payment programs on hold to review them to figure out which ones are in compliance, and that sent a shiver through our community. So that nobody should be putting anything on hold right now, but also that gives them time right now to figure out what might be in compliance and what might not. And so this shouldn't affect State Housing Finance Agency down payment assistance programs, because they are within state. I mean, I haven't ever heard of one being outside of state. So if you've heard about one, I would love to hear about it. But I think that's the kind of thing that the programs I think we care the most about in this in the down payment assistance world are ones that are geographically specific, and they're designed to serve their particular community. So, and communicating that to lenders would be helpful too. But there is it's a 90-day pause, but there's also depends on what happens in the lawsuit too, which, as Melissa pointed out just now, has implications that go beyond the quality of a particular loan, and also all these process issues they've got.
This is Melody. If I can I jump in and get through some of the questions that
Sure.
people are coming in? Sure. So the first question is, our county has a down payment program specific to our county. What do we need to do? Do we have to get the county solicitor to write a letter? That's what she understood as the director of the Department of Housing.
Wait, I'm sorry, they're asking for clarification on?
They're asking for clarification specifically on a county-run down payment program. Do they have to get the county solicitor to write a letter? Or what exactly is the process regarding that?
I really don't know, to be honest. I'm not sure of the details of that. So I apologize. I don't want to lead someone astray.
Well, so the thing is, it's a decision that HUD makes. So there's not much that a local agency can do outside of being very clear. If they currently only provide the down payment assistance in their geographic area, they should be in good shape. It should not be an issue for them. And I think but the thing is that it's really about what happens with this lawsuit, whether in fact this gets implemented or not. So there's actually nothing that's going to happen right now, and I don't know that there's anything we can do until it gets settled in the courts.
Okay, thank you. The next question is to either of our speakers. Can you clarify if the mortgage letter is currently in effect or whether it was withdrawn to modify over 90 days?
There was a subsequent mortgagee letter after the lawsuit was filed that put in a 90-day delay. So it's not currently in effect. The original mortgagee letter is not currently in effect.
Thank you. What is CRL's position on the DPA change by HUD?
I mean, I think we're still, I don't know if we have like a specific position. I think we're still kind of exploring the issue and trying to understand what the impacts are. And actually that kind of, not to pivot, but kind of to pivot, I wanted to ask like what, and if there are other questions, I'm happy to take those too. But I was really interested to hear what other people's experience has been with this. Like even with, and you can contact me offline if you want specifically about the Chenoa Fund or about some of these other national down payment assistance providers, because I mean, this was kind of a newer issue for me to kind of delve into and understand. So I'm trying to keep an open mind, but I'd be really interested if people have stories about how this works in practice.
Thank you. Our next question is this. Other than tribes serving their members beyond the reservation, are there actually government entities that seek to serve residents in other geographies? In other words, are there non-tribal entities that are seeing practical implications here?
Yeah, I believe there's a group, I think they're in Washington State, and I think there's also some lawsuit that they're involved in. I'm sorry, I can't recall the name of the group, but I think there's another group out there that, at least one, if not more, that provide it on a national basis. I don't think it's associated with a tribe, but I'll have to double check that.
When we met with Brian Montgomery last summer, this was top on his mind. It was almost comical as he talked about how his wife was complaining. There he was Sunday night going through looking at these different programs and using colorful language about the rates and the predatory terms, all that sort of stuff. And he identified ones in Connecticut and in California. So these were governmental institutions, they weren't tribal, and they were had pricing structures that he thought were not appropriate.
Mm-hmm.
Our next question is, does this affect our IOG as a nonprofit? We only use within, we only use within the city jurisdiction.
I don't think so, but I'll leave that to Bruce to.
So, sorry, say the question again.
Does this affect our IOG as a nonprofit we only use within the city jurisdiction?
So I don't know what an IOG is, but so you're talking about the group that's doing this is not the issuer. They refer people to down payment assistance, and in which case it's all about it's only the issuer that there's an impact on it. If HUD, if I'm understanding the question right, HUD will decide if it's appropriate or not. But of course, because of the lawsuit, that's not even going to happen for another 90 days. But if you're just an agency that's using the down payment assistance, it'll all have to be decided by HUD about what they accept, or FHA as a part of HUD.
Thank you. How does HUD distinguish what is regional and what is national?
So actually what they're deciding is what's the territory of the governmental entity that is issuing the down payment assistance. So HFAs are generally statewide, so the state is it. But if it's a county, it's the county jurisdiction. Tribal area would be the tribal area. So that's the difference between that and I think anything outside of your area becomes national, or however you want to think about it. But really the governing issue is what's the territory of the institution.
Mm-hmm.
Thank you. And our next question is, does a SHFA have to have an office in every county in the state?
That would be very unusual. I don't think so.
Yeah, no, I don't think so.
Yeah. Right. I mean, it's their jurisdiction is the state, so they don't need to have a presence in a county.
Thank you. Those are all of our questions up to this point.
Cool. Let's go. Let's pivot to underwriting. So, Melissa.
All right. Okay. All right. So you all may be familiar with this, but I'll just go ahead and give a little bit of background, just make sure everyone's on the same page about what happened here. So in early March, FHA issued a mortgagee letter announcing it was updating its total scorecard, the technology open to approved lenders, to manage, as they say it, manage the decrease in average borrower credit scores and the excessive risk layering that results when multiple risk factors are present. So basically, this change would flag some loans for manual underwriting. And the scorecard as you probably know, is a statistically derived algorithm that had developed to evaluate borrower credit history and application information. So it's accessed through an automated underwriting system and is not an AUS itself. So by way of background, in 2013, FHA revised their procedures for underwriting loans where the borrower had a below 620 credit score and a debt-to-income ratio exceeding 43%. So those loans were flagged as having to be manually underwritten. It sent kind of a flag to the AUS and with the total scorecard. And with manual underwriting, and I would also be interested to hear if other people have had the same experience, or from my understanding, a lot of times it's less likely the loan's going to be made, and it also makes the underwriter much more risk averse. This is perhaps because when the total scorecard generates an accept, no specific person must sign off, but it goes to manual underwriting. The underwriter has to put their name on the loan, and they're more concerned about liability. And again, FHA has this neighborhood watch system, which is comparing performance by lender, underwriter, and so on. So people kind of get worried about that. Okay, so they changed the rule in 2013. In 2016, they removed that from the scorecard. So you no longer had a situation where below 620, above 43 DTI were automatically routed to manual underwriting. That went away. And so now it seems like FHA is trying to put this back into place, but they're not doing it explicitly. They're not calling it an overlay. It's not as, they made a change to their algorithm. So they're telling, lenders that you may get different feedback results from certain mortgages, saying that they have to be manually underwritten. And it's suggesting that it's based off credit score or DTI, but there's not a specific threshold that they put out there. So I'll say it's difficult from the outside to know what the precise changes will be, as it's a change to the algorithm. That's part of the black box. It's not an explicit overlay as it was in 2013. I've had a couple conversations with folks. This is very unscientific, but I'll share it. So one lender told me that so far they don't really see any changes in loans being approved because of the policy, but it could perhaps also be because the lender has other requirements and overlays that they might not issue the loans anyway. Another consultant told me he was at a VA conference, asked the audience of lenders if they noticed a difference after this change in policy. And again, this is completely unscientific, but he said about a third said no impact, a third said 5% impact, and around maybe 10 people said over 10% impact. So I'm trying to find out more and talk to more lenders to see if they're able to kind of discern exactly what the change is. And I hope to keep, to monitor this. FHA says they're going to be monitoring it. And I think it's also really important that we hold FHA to be transparent about what they're finding and to publicly share information about what the impacts are. So if you all have, seen any differences in with the borrowers that you've been working with, or if you've had conversations with lenders that may have shared anything useful, I'd be really interested to hear about it, whether you want to talk about it now or you want to email me or call me later. It's very, we're very interested to see exactly what the change is, since it is very much clouded in secrecy, because it's just part of the algorithm. But there's definitely a change.
And I mean, it would be great if people are hearing about this. It's also possible that the lenders are being told, and they're not passing this on to the counseling agency. Um, and it would be worth people making an effort to ask and letting us know. But Melody, we gotten anybody that has
We have
weighed
one
in
more
yet?
question that came in. If I can just ask this one really quick.
Sure.
Their question was, so this is a question from a good partner of ours, Kate Reese. We originate home funds, the second mortgage DPA on behalf of the county. After the first time buyer completes home buyer education and counseling, we are paid a fee for each closing. How does the proposed rules affect us?
Oh, the DP is on a county basis, so I think it's like, well, it if it's acting like if they're acting within their geographic jurisdiction, then I don't think there's a change. But I'm not sure I entirely understand the question.
So I think that's the right answer. That as long as it's within the jurisdiction, it should be invisible. I know you mentioned that you get paid for this. If that's an issue at all, I don't think it is. That wasn't addressed in the mortgagee letter, and I think it all should be fine, regardless of what happens in the lawsuit. Good. If anybody wants to weigh in on the underwriting, if they've seen any changes, I mean, this is sort of a critical issue because we are desperate to get more people who have credit scores below 620, but who are reliable borrowers who, because of your housing counseling, because of the, if you do a deeper dive into their credit history, where credit scores don't always reflect well on people coming from low wealth communities, that there's good potential buyers who are not able to get in because the credit score devalues who they use as lenders, doesn't they don't kind of play the game of how to get a better credit score because they don't know the rules, which are not very transparent, but and often counterintuitive. All those kind of things means that people who could be quite reliable but have a lower thin credit file or minor ding that has a great explanation, those folks end up less likely to happen because they the lender doesn't want to go to manual underwrite, and there is especially in the mortgage company world, there's a strong bias towards anything that's automated, and a loan that goes to manual underwriting, it's not the kind of business they want to do. Melissa pointed out the liability issues they've got, but it's also just it becomes a more expensive loan then because it requires more staff time, and the Quickens of the world are all about rapid transaction and lowered transaction costs. So this can have a direct impact on who will actually qualify. We have continued to try to get lenders to look at the concept of you're able to go lower on credit score if somebody successfully completed a housing counseling program, and there's an evaluation that in fact the credit score doesn't properly reflect what people's capacity and willingness is. But we haven't gotten the kind of traction we would like on that. But that always seems to me like a way of addressing this, and it's kind of part of our longer-term strategy about how to track loans that have been counseled and build into the whole mortgage transaction that the counseling occurred, and that when investors look at a loan, if they can look at the loan package and see what percentage has been counseled, that might counteract the impact of having low down payments or lower credit scores, and may help with the pricing and availability of that loan package. So that's a big issue. And then the back end ratio. given housing price issues, has become more important to us. And about 43% is just more frequent in our business now because wages haven't kept up, and housing prices have continued to climb in many of our markets. So each of these issues, if you trigger into manual underwriting, becomes a problem. Just want to check in, Melody. Did we have anything else? Okay, good. So I think that might be it. Melissa, do you have any quick last-minute word before we move on?
No, I don't think so, other than if anyone has any other information and that they're willing to share about these topics and your experiences, I'd love to hear it. Thank you very much for having me.
Okay, great. And we had a survey that we had done on payday loans and on auto title loans last week, and I posted that again. And it's in the email chain. If anyone's interested in filling that out, they should do that now. I think we're going to close that shortly, and that's in conjunction with the Americans for Financial Reform, and they're interested in figuring out what's happening and what's the impact of payday loans on your clients, but also on your work, and if it requires you to do extra work. And they're working with a number of public interest attorneys trying to figure out the consequence of that. So take advantage of that if you're seeing that in your business. Okay, well, thanks to our friends at CRL, and we'll touch in occasionally on these and other issues that they're doing on the mortgage world. So let's pivot quickly to a picture's worth 1,000 words. So Ellie Pepper has been working on this, and you all have been very responsive, but it is, it's just a picture that doesn't really need an explanation, but it really defines our work. And thank you for the number of groups that have sent in pictures, and if you haven't, I know you've got them. So it's just a picture that describes something around the homeownership world, around housing counseling, around who we serve, who we are, what our work looks like. So please think about. I know it's an effort to go back into your hard drive and dig these up, or get the staff to do it. But think about the fun it is to see these, to relive them, and it's going to be a useful tool for us. We'd like this not just to be something that we share among ourselves, but also we're trying to build a catalog that we can use then to help housing counseling programs around the country promote our good work and the message of why you go to see a counselor.
This is Melody. And also for those who are providing us submissions, thank you so much for that. We also use it for advocacy purposes. So for instance, the picture you see on the screen is from North Carolina, Representative Price, who is the chair of the House THUD subcommittee. He is also from South Carolina, and he is a supporter of housing counseling, and we're happy to have him in our efforts. But for those who are from states where maybe housing counseling is less known, or people don't see the value of housing counseling in their district, these sorts of pictures are just a very simple and quick way that we can potentially send this to members and say, this is what's going on in your state. So the larger we have a clearinghouse, if you will, of these sorts of images and case studies and data points and metrics, it's easier to make the case across the country and show the impact that housing counselors have in their communities. So thank you those who submit, and we ask them to keep them coming. Thank you.
Cool. Okay, and NHRC membership. So we'd love for you to join if you haven't already. We are up to 160 some odd members, and that's been great. We a year and a couple months ago, we were like at 100 and a little bit 105, something like that. So our membership surged in the past year. So that's great. And actually, we're in a big renewal phase right now. Lots of groups are renewed. And the reason to be a member is to really support the work, so that in some ways support us so that we can support you. Having membership dues means that we have the flexibility to lobby in Congress and not to be beholden on others, but also that, you know, some of our funding sources do not permit lobbying, and this allows us to really do the work we're doing. Our work has surged with Melody full time on this, so this has been terrific. We've really increased our presence, and I'm pretty confident that housing counseling is in a number of conversations because we were able to get the letter out that was signed by 300 plus groups, and to do all the state work, which really has raised our visibility. There will be a big conversation about infrastructure, and we think that housing counseling and also affordable home ownership can be a part of that conversation, and we want to be a part of it. There's the whole thing about disaster recovery, which is a growing area in our business that, unfortunately, we're going to have more of. And there's a fair amount of money flowing in, and it would be great if that money could flow to organizations, to the housing counseling groups that are impacted in areas quickly, so that it doesn't come months after the disaster occurred. And we're also trying to make it so that housing counseling is included in every plan rather than an option of every plan. So we'll see where all this lands, but we are getting a warm reception in the House and an interested reception in the Senate. So we'll see where it's going. And it's interesting on CDBG-DR because that's actually been pretty bipartisan. At a time when there isn't a lot of bipartisan work, this is one area that storms don't discriminate between Republican versus Democrat. So everybody seems to understand this. So please think seriously about joining NHRC. And also we have, I just got surprised the other day when I realized that a couple groups joined because they had not taken advantage of they couldn't take advantage of our credit report discount. And I know we haven't really marketed that much in the last in a little while, but it's really it's a good deal. Lots of groups are using it now. And if you could take advantage of that as well. So next, our next call on the 16th will be, I think, a very interesting one. It's sort of one that I kind of asked to pull together. It must be maybe 4 years ago, maybe even 5 years ago. We had on the leaders' call a conversation with National Capacity with Jane Duong, if you remember her. And it was about how do housing counseling agencies more effectively service the Asian community and Pacific Islander API. The idea is that these are much more complicated, diverse communities than just being quote unquote Asian, and that there's a lot of nuance here. There's a lot to understand. There's a lot of assumptions that I think we come with, and that it's really helpful to have people with deep knowledge and cultural competency to help us think more broadly about this. The idea would be that we'll have some national capacity, national staff, as well as some local housing counseling programs in the conversation, so that, and LA's been working with them to develop a kind of a format here that I hope will be useful to us. I hope it will do this periodically. It's the Asian population is the fastest growing immigrant population in the United States. It has been for the last couple of years. And it's, I think people are showing up at our work more. So this is, I hope will be useful to us and informative. So that'll be on the 16th. And it's worth saying the national capacity people really do a good job. So this will be, I think, valuable for all of us. So with that quick note, we'll close out. Thanks so much, everybody. We'll talk in 2 weeks.